Hey there, it's Joshua Bellinger here at OptionSizzle.com, and in this video I'm going to show you a case study of a name today that saw some unusual option activity, and I want to walk you through kind of the breakdown of why it was unusual and really the advantage that you have when you look and follow this type of activity. On the front page here at OptionSizzle.com, if you come here, you'll be able to download the free report that we have explaining unusual option activity, how to find it, and in that report you'll also be able to find out exactly the software that I use and how I use it to find the best candidates. So today I want to show you this stock here, which was SUNE. And what I want to do is I want to break down. Now, I'm not going to go into the whole concept of what options are. We have other videos that we cover that. The simple aspect is when we look at some of this activity, and for me to explain it to you, especially when we see something in the weekly options which expire today, and there is a person that comes in near the close on a Friday, and today is March 7th, 2014. So in a few seconds here, I'll show you exactly what I'm speaking of. But if we just take a look here at those March 21 calls, they traded 4,700 times today, and the stock traded and closed today at $21.11. It opened at $21.47, and the high was $21.90 with a low of $20.72. Now, towards the end of the trading session, there was an unusual buy of about 2,000 contracts of those March 21 options. Now, this is unusual because they came in at 11 cents, which I'll show you in a second here. But when these individuals come in, when the options expire within, at that time when I had posted this on our Twitter, which is twitter.com/OptionSizzle, I flagged the activity, and I had mentioned that the fact of that there's only 70 minutes left in the trading session. So we just had about an hour to go, and buyers stepped in and bought 2,000 contracts at 11 cents. And we'll look at the chart, but that is very unusual, especially on a Friday. That is something that gets my attention. And the reason why is because this individual or whoever put this trade on was betting on some kind of movement to occur within the next 60 minutes almost. And what typically happens is that what I've seen over the last several years, or just in my overall experience in the last 5 or 6 years, is that what happens is that we kind of get what's known as front running, meaning that there's some kind of chatter or rumor about the company maybe getting taken over or something happening at an event. You know, all these kind of headline news reports that when someone sees it or when other traders see it, they kind of scramble with it as well. And what is happening, and a lot of times, is that these individuals buy these options of calls or puts, and then they send out these fake rumors to front run it. And what happens is that the news services pick it up, and then it kind of spikes higher because other people are putting more weight into it, and then they sell those options to those other people. It's a very grimy business at times, but when we understand that, we can leverage it and see what's exactly going on. So when I see that cross the tape and they're buyers, that is interesting to me. And what I'm using here on Thinkorswim is, well, on Thinkorswim, they have right here, you can see where the time and sales are on option contracts. And, you know, this April 23 contract, 9,000 of those traded. That's not the ones I was talking about. If we go, and I'm going to have to go down a little bit here in time, but if we scroll down, this is exactly what I'm talking about here. This is right when I flagged it, and again, you can look at our Twitter and Facebook, but this is right when I flagged it. I saw this cross the tape. Now, the interesting thing here is that this is 6 cents by 11 cents. The odd thing is that this only has a few, this has less than an hour to really have success. And they're also willing to pay the price or pay the offer, which is 5 cents. Now, 5 cents on an option like this is big slippage. It's about 50% of slippage. So when they pay the offer, and they also are coming in on this short notice or this late in the day on a Friday, which is very unusual, and also they're willing to put up this, you know, this kind of money. I mean, people don't go into the market wanting to lose money. The assumption is that they know something and something's going to occur. that is a very unusual for me. This is the kind of stuff that I like to see. And if we go here, we can see some other activity, but that was the block that I noticed that really got my attention. Now, what I want to do here is I want to show you the blocks here, and this is the option contract if you want to chart it yourself. But here we could see these two blocks come in, 1347 and 1349, and they came in right here at 11 cents. They're opening buyers. Now, we can see from there as the time goes off, even going into about 40 minutes into the close, these actually popped up to a 21 cents. These actually traded here at 21 cents before they actually came back down. And then towards the end of the day, 15 minutes into the close, they're still at 14 cents, which is really remarkable because I thought these would get collapsed pretty quickly. What happens is what we want to typically see is you want to see these come in and you really want to flip it into strength here. So, you know, even though that this could have been some kind of front running where the options would have, let's say, gone up to 40 cents, you never know that. And especially when you get into an option contract, let's say 10 contracts here, it would have cost you, let's say you got in at 11 cents here, we're talking about $100 investment. Now, when we start getting into like right here, you know, this is where you want to get out of it at 16 cents. If you pay 11 cents, you have about a 5-cent profit. We're not talking about big money here, but this is those kind of little, I recommend them as lottery tickets. You have commissions that take and eat away at it. Commissions on average are about $1. So if you get 20 contracts, that's $20 in, $20 out, that's $40. You know, you kind of see where the fact of you really need to get that big move to really occur. But you know, for this is you always want to sell into strength. And if we looked at the stock here on the 1 minute, you kind of see that it actually started to spike higher here towards the end. And that's where you really want to sell into strength because you never know what is actually going to happen. And especially that late in the day, you could see where the options could collapse. And when you looked on that towards the last few minutes, you actually saw that buyer get out of their options for a little bit of a loss. And it looked like if there was some kind of news that they're trying to push out or whatever they're trying to bet on didn't fulfill the way that they thought, because even at that price where it traded at about 21 cents, they were still holding in, meaning that they were looking for something much greater in movement than even that 21 cents, where if they bought at 11 cents and they sell at, let's say, 22 cents, that is a 100% win. They're looking for a big bet here. And those are the advantages of using unusual option activity. Now, this wasn't a big home run. However, these are very precise clues and footprints of something to occur. This was some kind of trader betting and making a directional bet that something was going to come out to really push prices higher. And I have seen this, especially this week, in names like WWE and various other names. Another one today was AR or AEGR, where buyers were coming in the morning here. They were coming right here at these March 50 calls, and you could see here some news came out, and those options that were at the money, I believe, traded all the way up to about 200%. I think they were getting in at about $2, and I think they moved all the way up to about $6. So again, unusual option activity is something that every investor and trader should be knowing what's going on in the option market because of the leverage, because of what these insiders are doing in the options market to get that leverage. So what I suggest is going over to the website, downloading our free report. You just got to enter in your email, and a real email, because we send it a link to you, and we have the report, which is I think about 15 pages, and then we talk about how the software that I use to be able to identify this or to identify this type of activity. So if you have any questions, feel free to leave them below, and I will be able to answer them for you. If not, we'll see you on the inside.